Hey everyone, happy holidays. Welcome back to your weekly market outlook. This is for the final week of 2023. This is 26th of December to the 29th of December 2023. So let's take a look at last week. We do still have a few things going on. I think one of the biggest disappointment last week was the Bank of Japan interest rate decision. We didn't actually see the move from away from negative 0.1%. I think market was expecting some sort of announcement from the Bank of Japan. We didn't quite get that. In fact, the Bank of Japan remains pretty passive, pretty dovish in terms of their monetary policy. They're not, as of yet, announcing it formally in terms of moving away from negative 0.1%. And no official confirmation, really disappointing the market there. But we do know that Bank of Japan is planning to move away from negative 0.1%. RBA meeting minutes didn't have quite a lot of impact onto the market. It does sound a little bit more hawkish than what the other central banks are currently doing, but that's pretty much it. In terms of last week, we have the personal consumption expenditure income. We saw a little bit of an increase from 0.3% to 0.4%. Personal spending, a little bit of an increase, but not as much as what the market is expecting. It came in at 0.2% versus 0.1%. We also have the UK inflation number. UK inflation number does come in a lot lower than what the market is expecting, a drop from 4.6% to 3.9%. This week, I know there's a lot out there in terms of the data, but in terms of whether or not it's actually going to be a high impact, we don't actually have any high impact news except for maybe the oil inventories. But if we take a look at the numbers here, it's more or less housing numbers coming out from the US there. We do expect the retail sales from Japan to come in a little bit higher, from 4.2% to 5%. This is the final retail sales, or the retail sales year-over-year from Japan. We have the weekly unemployment claims from the US. Consensus is that for the jobless claims to come up a little bit higher, from 205,000 previous week to 210,000. Wholesales, and then oil inventories, and that's pretty much it coming out from the last week of this year, right? We don't actually have a lot of trading activities going on right now. I think for this week, for today, it's still going to be Boxing Day for some of the countries out there, including Australia and the UK. Yesterday was Christmas. And that's pretty much it. We are going into the end of the year. So let's take a look at it from a technical standpoint. For the dollar index, this one here, in terms of the trajectory, we have broken through a lot of key support level for the dollar index. And right now, it is kind of hovering around 101.50. For the dollar index, right now, we do expect the US dollar to continue to be a little bit weaker leading up to the end of the year here. We're not expecting crazy reversals for the market. So for this one here, we do expect the trajectory to remain as it is. In terms of volume, we have seen a huge drop of volume, and we expect a huge drop of volume this week as well. So we're not expecting ridiculous volatility. So for the trajectory, we expect the US dollar to continue to weaken towards the year's end, but we are not eyeing any break below 101 at this point in time. In fact, we could actually just hover around 101.50 for the dollar index. If we take a look at the Aussie USD here, we are currently facing a little bit of a resistance. That's around 68 to 68.25. So we do have a little bit of an immediate resistance for the Aussie USD. No divergence noted on the Aussie USD. So I think the Aussie USD, in terms of the major currencies, this is probably the more stable one. In terms of key resistance, we are eyeing a high at 69 cents for the Aussie USD here. So expect resistance to come in at 68.25 to 68 cents to 68.25. This is going to be your immediate resistance zone, and beyond that, we are looking at 69 cents. In terms of how the Aussie USD could move, if it's able to break above 68.25, and for the rest for this week, we expect Aussie USD to slowly grind towards that 69 cents. However, If it's unable to break 68.25, we expect the Aussie to be traded more around the 67.50 range for this week. Now for the Euro USD, we are currently looking at a class A bearish divergence, and we are also seeing that price is still just hovering around the 1.1 mark. In terms of resistance, we still have 1.10, but the more interesting one is the 1.10, because if we see price dips back down below 1.10 and the cutoff level would be at 1.0975. If we see a daily close below 1.0975, then we expect the Euro USD to be traded lower towards 1.09 as the year closes. But if it maintains the position above 1.10, we expect more from range bound market condition, just hovering around the 1.10. And especially if we see the momentum drops and we don't have any push in the market, then we expect the Euro USD to be stable at around 1.10. The pound USD here, also the same thing. We noted that bearish divergence here. We're still posting higher highs here, but the oscillators, in this case the one I'm using is the RSI, it is pointing at a lower high, so we're losing a lot of momentum here on the pound USD here. In terms of immediate resistance, we're still below that 1.27 level, so we do expect that 1.27 level to act as the immediate resistance for the pound USD. This one here, we don't expect enough strength for this one to be lifted towards 1.28, but if it does close above 1.27, then expect resistance to come in at 1.2750, 1.28. But the more probable scenario is for price to actually be traded between 1.26 and 1.27 for this week. Now, next up is the dollar Japanese yen, and we can see with the dollar Japanese yen, we do have a little bit of recovery on the disappointment that the Bank of Japan didn't formally announce the potential moving away from negative interest rates. But right now, if we take a look at the dollar Japanese yen, the yen itself has actually gained post announcement, right? Post non-announcement, because we do know the move away from negative interest rate, that's going to be more of an eventual thing rather than anything else. And also from a technical standpoint, we have that resistance at 144 as well as 143.80, which is the consequent enroachment from the fair value gap as well. So this is moving more on the technical perspective rather than anything else. So for now, this is finding a little bit of a support at 142. But below that, we have a stronger support at 141. We don't expect price to break below 141 or break above 144 for this week. We expect price to be stable around the 142, 143 range for the Bank of Japan. All right, and that's pretty much it in terms of the outlook for this week. We're expecting a lower volume. We're expecting less volatility in the market as the year wraps out for 2023. With that, thank you for your support for this year, and I'm looking forward to providing more reports and outlook for you guys in 2024.